What's going on, guys? Throwing together a quick video recapping the week. Everything looks very, very bullish. SPY formed a new local high today, cracking into the 444 range. Looks very, very good. AMC relatively flat again, but is still forming an uptrend, forming some higher lows, and it looks very good. This video might be a long one, so I'm going to jump into it, and we'll start with the macro on SPY. Descending broadening wedge for a year. Breakout, retest, reclaim the ascending triangle. The descending broadening wedge transitioned into an ascending triangle. Sideways towards the end of the ascending triangle here, before you break out, retest, and then you gap up from the breakout. Find more upside here. Pretty much double topped, 444 right here. Came down, bounced off the 20 EMA, found some upside, and then actually gapped up from 438 to 441 and change is where we opened today, and then saw more upside all day and actually formed a new 52-week high. Once again, another new local high on SPY. 444.30, I believe, was the high. And once again, SPY has not seen this level here, this range here, since April 2022, all the way back here, over a year ago. And with that, from October 2022, this bottom right here, SPY has done nothing but form higher highs and higher lows to the upside and break two macro patterns, the descending broadening wedge and the ascending triangle, to the upside. So this looks very, very bullish. Golden cross on the daily on the S&P 500 is extremely bullish. 65 days in a row, closing over the 200 EMA, extremely bullish. Once again, I always cover SPY in my videos because I think it's significant. Both times that AMC squeezed, January and June, SPY was rallying to the upside in a very similar fashion to what we're seeing now. This chart is screaming bullish. There's nothing bearish about this chart whatsoever. Anyone who's still bearish on SPY, which I don't know how you could be looking at, I mean, maybe you're looking at your computer upside down. That's the only way, because there's nothing bearish about this chart at all. So very, very bullish here. Once again, jumping into the symmetry on SPY, where the blue box would be your middle, where you have your lowest low here. You actually have one break above the ascending triangle here to retest the wedge. Coming into the red, you come down below the horizontal line at 380 in both sides. On the left, you came a little bit lower to retest the wedge here. From there, you bounce up to 418 on the dot, as you do over here, where you reject. From there, you come down to 380 on the dot in both of the greens now, where you find a bounce. From there, you come up to 430. These purple circles here on both sides. 430, you have 3 touches on that before you break through that. Next stop, 438, where you reject here and pop through. We did the same thing over here, rejected it, popped through. 450 would have been the target for the next stop as far as the symmetry goes. I mentioned multiple times that when we rejected 444, that could have been the symmetrical equivalent to the 450 we were looking for. And from 450, we were expecting to come down to 438, form some support here before moving higher. And I mentioned because we didn't make it all the way to 450, we went to 444, that because of that, we could expect to come a little bit lower than 438, back down to the 429, 430 range, and form support there before moving higher. Actually came down to 431, I believe, and found a bounce and actually formed a new local high today. So looking at the way this played out back here, it's very similar. It's a very similar move on both sides here. So from that 450 rejection, when you come down and find support, which we would have done that already, coming down to 431, and now just found a new local high, slightly higher than what you saw previously. It is possible, as far as the symmetry goes now, that we come down one more time, and this would more than likely be coming down to the 438 range. One more time, finding a bounce there, and then we would get the rest of this upside. It is also possible that we just take off from here. This looks extremely, extremely bullish. No complaints whatsoever. So the uptrend on SPY, once again, where you have the ascending triangle here, the end of it, where you fake out right here, come back down to support, break out, retest, and then you form this bull trend to the upside, where you have multiple bounces off of it, which took you to 444, which would have been the local highs previously. You come down from there, gap down below the bull trend here, and then trade in this descending channel for about a week before you break that to the upside, and now actually just formed a new local high today, 444.30, higher than the top that we saw back here. This looks extremely bullish, and as I previously mentioned, as far as the symmetry goes, you could possibly expect to come back down to 438, maybe a little bit lower, 436-ish, that range right here. 436 to 438 range, and come down one more time, form support there, and then that would form a cup and handle actually, and then move higher from there. So this looks extremely, extremely bullish. Jumping into AMC now, the macro on AMC, and this macro dates back to 2017. Actually dates back to IPO, but we're just looking from 2017 because that's where the downtrend starts. So you have a descending trend line on both sides here. No touch points on the descending trend line on the way down on both sides. So you have your green here, more or less a W move, which you have here. You have the red, which is a cup, same over here. And then you have the blue, which you come down, bounce up, come all the way back down, curl up towards the end, come down, bounce up, come down to the bottom, and then curl up towards the end here before dropping to the flat portion here, which is where it would be, where you have this orange, purple, and blue box, and that would be comparable to the orange, purple, and blue that we have here. And the blue took you to your squeeze. The January squeeze that we saw is what we're looking for now. This blue box here will be taking us to our squeeze. So this looks very, very good. I also mentioned this multiple times too, that this move here from when ape was dropped, we are curling to the upside here. Very clearly curling here, bottomed out here, forming higher lows now. That 401 dip here, which would have been our third bottom, we are curling here to the upside. And when we break this triangle and come up on the other side of this, that will be our squeeze. So this looks very good. Jumping into it, looking from a different perspective now, where you have the same exact macro I just showed you. I just took the colored boxes off the flat portion, so it's less cluttered. And I have some lines. So 1, 2, 3, 4, 5, 6 takes you into the blue. 1, 2, 3, 4, 5, 6 takes you into the blue. From there, you drop down to the flat portion, where you have 1, 2, 3 touches on the bottom before you squeeze. And same thing over here when you break down from the 6 point. 1, 2, and 3 would have been our third bottom there. And once we break this triangle here, we will be squeezing. So this looks extremely good. Once again, price targets for the squeeze. And I actually am including some Fibonacci extensions in this video. But just to say it briefly, $140 is my price target based off of macro Fibonacci extensions. But I am leaning more towards MOASS instead of 140. MOASS would be much higher. And 140 is not accounting for the reverse split. Once again, it's not accounting for the reverse split. That's if we squeeze right now, no reverse split, $140 based off macro Fibonacci extensions. With the reverse split, times it by 10, it would be $1,400. Getting into the micro, and once again with the micro, we're just zooming in on the flat portion on both sides. So the orange, purple, and blue box. When you break down from the blue here, you come down to the flat portion, the orange, purple, and blue. And when you break down from the blue here, you come down to the orange, purple, and blue. So we're zooming in on the flat portions here of both macro perspectives and looking at that a little bit closer now. So the orange is more or less a W, where you have this chop here at the bottom, which takes you back to the top. Same thing over here. Again, support resistance was a lot tighter here, so the chop was a lot tighter down here. But nonetheless, takes you to the top. The purple, more or less a cup. Same here. Higher high on the right, actually. Same over here. You have a higher high on the right. And then the blue is more or less a W, a very symmetrical move with a tri-peak in the middle. That took you to your breakout and your squeeze. So that's what we're looking for now. This blue box here, where we have our first bottom, the tri-peak, and then our second bottom here. And now we should be forming an uptrend the same way we saw back here, and that should break us out of the triangle, and that will take us to our squeeze. Once again, this white horizontal line drawn across on both sides. From the second peak of the tri-peak, when you come down, bounce to the third. So second peak, come down, bounce to the third peak here. This white horizontal line is drawn across on both sides. So in the blue, when you're coming down, you break below the white horizontal line, come above it, and that brings you to the first bottom in the blue box. Same thing over here. You break below it, come back above it, and that brings you to the first bottom in the blue box. Runs right under the purple and right across the chop at the bottom of the W in the orange, same on both sides, and right above this gap here and this gap here, which is a fractal break. And that is that. Now, once again, getting into the time, the date range of the micro, from the start of it, the January 2021 cycle on the left, from the start of it until squeeze day, 342 days. From the start of it until your third bottom, 320 days. Over here in the current cycle, from the start of it until our third bottom, 204 days. So 204 days versus 320 days. We're tracking this much faster, roughly 3 months faster. And I mentioned yesterday that from the third bottom, until your squeeze, until your peak, was roughly 22 days. And we already got our third bottom here, and we're on day 5 from that third bottom, and we're tracking this much faster. So once again, from the third bottom until your peak was 22 days back here. We're tracking this faster in the current cycle, and from our third bottom, we are now 5 days in. So this could get parabolic very fast. There can definitely be a squeeze in the very near future here. This looks extremely good. Once again, jumping into, if I could click on anything, okay. Jumping into the micro, and what I'm showing you here is the same thing I just showed you here, except it's not going to be candles now. It's going to be an area chart. So that's what we're looking at now, and this looks very good as well. So once again, this is the flat portion of both sides. You have 3 touches on the bottom, 1, 2, 3, 1, 2, 3. I mentioned that more than likely coming down from this third peak of the tri-peak would be forming a slightly lower low than what we saw in April. But I mentioned it didn't have to be a lower low, and we didn't get a lower low. We bottomed at 401, 7 wicks on the 1 hour chart at 401. Absolutely could not break sub 4 here, and found a very nice bounce, 10% off, and the past 2 days we've been relatively flat, holding all of those gains that we saw from that 10% bounce off the bottom. So in this area chart now, from the start of and this would be the orange box that I just showed you in the previous slide, where you come down, you bounce up, and then you come all the way down to the bottom, and you have this chop here. On this side, same thing. You come down, you bounce up, you come all the way down to the bottom, and you have this chop here. And then from there, and this would be your first bottom on both sides. From there, you bounce up, and you have 3 peaks, and each peak is higher than the last. So increasing height on each peak here. Same exact thing over here. Increasing height on each peak here. Before you come down, and that would have been the purple box, and now coming into the blue box now. You come down from that third peak up here. You break below the horizontal line in white on both sides. You break below it, you come back above it on both sides, and that takes you to your second bottom. So same thing over here. You break below it, you come above it, that takes you to the second bottom. That second bottom is pretty much in the same range as where you found the first. Same over here, same thing here. And then from the second bottom, you get into the tri-peak, and we get into the tri-peak here. And then from the third peak of the tri-peak, you come down one last time, form your third bottom, and from that third bottom you form an uptrend which breaks you out of the triangle, and that breakout from the triangle, after you get that breakout, it gets parabolic and it's just a straight line into your squeeze. So this bottom here would have been our third bottom, could not break sub 4, and now we have found an uptrend. This looks very good. This will be breaking us out of the triangle and taking us to our squeeze. This chart looks amazing. Everything does, but I really like the way that looks. Now getting into it on the micro, I can click on it. I showed this chart the previous 2 days when we got that 10% pop end of day, where this this red and yellow box right here, same as here, would be taking you down to the channel, the ascending channel. This would be the lower low, which you form an uptrend from, and this uptrend takes you to your breakout. You actually gap above the channel here, and this gap above the channel breaks you out of the macro, and you squeeze from there. So I mentioned we're going to be tracking this channel now, where this pop right here, end of day, on Tuesday, would have been the equivalent of this pop here, the reaction off the bottom that I was talking about, and the volume profile is very similar. Very nice volume on this pop here, comparable to what you saw previously. Very nice pop there, and same right here. So now getting into that on the micro, so updated now, and all the markers are showing approximately where I believe we are in the tracking, where you would have formed this cup here, which would have been your bottom. The red circle here and the green circle is slightly higher. Same thing over here. So you have the red circle here, your bottom, same as here, and then you curl up, and then you get the reaction off the bottom here, and then the green is slightly higher. Same here. Again, the volume profiles match up very nicely. The orange boxes are showing that. And then you come down and you form a double bottom here, slightly higher on the right, same as what we saw right here. And then you pop from there back up to the middle of the range, not as high, which would be the blue circle here. And then from there you come back down again and then form another double bottom here, slightly higher on the right once again. Same thing here. And approximately, this is where I would think that we would be in this channel right now, which would be coming up right here on this pop right here, approximately. I could be wrong, but you know, tracking on the micro is very difficult to do. Definitely could be wrong about this, but so far it looks very good. From that bottom at 401, absolutely could not break it. Could not break this bottom here. Very, very good. And the volume profile of this pop here on the blue circle actually matches this right here. And one other thing I wanted to mention too while I'm here is that all of these pops that we're getting here in volume, all these nice volume spikes in the green, are happening at the same time, end of day, 1600, versus the same thing over here. You saw in this uptrend, you have these green volume pops here, and all of these were at the same time as well. It was roughly 9:45, but all at the same time every day. So that's what we're going to be looking for, riding this ascending channel up, getting the gap over the ascending channel, and that will take us to our breakout, which will take us to our squeeze. This looks very good. There's another scenario, and I'm just pointing this out. I'm not saying this is for sure, but there is another scenario here where we would have already broken out of the triangle, and this is drawing the trend line in the, so we're looking at the flat portion of both again, 2021 cycle on the left, current cycle on the right. So we're looking at the blue box here, drawing a descending trend line from the top of it over your tri-peak. The second peak rejects right off. The third peak actually breaks slightly above. So doing the same thing over here, drawing a trend line right down to your second peak here, and then the third peak actually breaks slightly above. When the third peak breaks above, it breaks down from that, and it forms this cup move, which breaks you out, and then you come down and retest. So again, the second peak rejects off, you come down, bounce up to the third peak, breaks slightly above, and then you form this cup move, which breaks you out, and then you retest, and then you squeeze. I'm not saying this is for sure, but I drew the trend line the exact same way here, where you reject the second peak of the tri-peak, and then you come down, bounce up to the third peak, you break slightly above it, same thing in 2021, and then you come down and form this cup move, which breaks you out, and then you get in your retest. It is possible that that 10% move that we saw was our breakout, and the past 2 days we've just been in the retest. And zooming in a little bit more on this, this actually looks very similar, where you have your second peak, you come down, third peak breaks above, second peak, come down, third peak breaks above right here, and then you come down, form this cup, which breaks you out, and then you come down and then retest, and then you squeeze from there. So the second peak poking above here, you come down, and then that theoretically, and I'm not saying this for sure, but this is a scenario, and it's definitely valid, where you come down and you break out, and then the wicks here are very similar from the breakout. You have your lowest wick right from the breakout, and we have the same thing here, and then you bounce up from that lowest wick, and then you're relatively flat here, and that's exactly what we have. So there is a case that we actually broke out. We actually already broke the macro and retested. The past 2 days would have been the retest. I'm not saying this is for sure, but just drawing the trend lines the exact same way on both sides, it's pretty much the same thing. So there definitely is a case for it. And to go with that, like I previously just said, we are tracking this much faster. In the 2021 cycle, from your third bottom until your peak was 22 days. We're tracking this a lot faster in the current cycle, and we got our third bottom 5 days ago. So we're 5 days in from the third bottom. I'm just saying. So I'm just pointing that out. Looks very good. Now getting into the daily gaps, and this again we did the same thing. We're looking at the flat portion on both sides. So you have 1, 2, and 3 bottom, and 1, 2, and 3 right there. And while I'm on the daily, once again, back-to-back hammer candles. We closed at high of day today, forming higher lows here. Didn't form a higher high yet, but higher lows here, and pretty much closed at high of day the past 2 days. So this looks very good. And now touching on the gaps that we're seeing here, which are pretty much the same thing. And the orange is the W with the chop at the bottom here, and same over here. You have the chop here. And this is actually where you find your first gap right here, which takes you above the horizontal line. You come back down and gap again from there. So same thing right here. You get your second gap right there. You come higher, come back down again, gap again, that takes you to the top. Same thing here. So that second gap brings you up. You come down, you gap again, takes you to the top. In the purple, it's a cup. You come down on the right side of it, your first gap here. Gap up from there, consolidate, gap up again, and then get the rest of the move up. Same thing over here. Come down, get your first gap right here. Come all the way up here, consolidate, and then gap again, and then you get the rest of the move to the top. And then in the red, once again, same thing. You have a gap down at the beginning of it, break below the horizontal line, bounce above, break below the horizontal line, bounce above. gap down from there as we do here. You get your second bottom. Your second bottom here. From the second bottom, you gap up again, which we did here, into the tri-peak, which we did the tri-peak here. And then from there, you come down, gap down one more time, and then come down to your third bottom. And right here, gap down one more time, come down to your third bottom. And then from that third bottom, you curl up, form an uptrend, breaks you out of the macro, and you squeeze from there. So it looks like the bottom's already in, and we are now in the uptrend. And once again, we're tracking this much faster. And I previously mentioned that this move here in the blue is very symmetrical. It's a very symmetrical move. It's a W where you come down. The tri-peak would be the middle of it, and then you come down over here. You bounce up, come down, bounce up, come down, and then up from there on both sides. Very symmetrical move, and that's what we're going to be looking for over here. And this is forming, it looks like a star bottom here. And just if we're talking just straight symmetrically, we're talking about symmetrically here, the next move that we should get is a straight line, where we would have just came down to this bottom here. It's pretty much the same thing, just not accounting for the knife here, but we would have came down pretty much to the same bottom that we found here, and curling up from here would be the symmetrical equivalent of the other side of this move. So this looks very good. Everything looks very good. I have absolutely no complaints at all. Everything looks very bullish. Now getting into the Fibonacci extensions, I'm not going to go crazy into it, but looking at the January squeeze, running a Fibonacci extension from the bottom here to your top that you find back to your bottom, the January squeeze went halfway in between the 2618 and the 3618. So again, 2618, 3618, January squeeze went halfway in between. Looking at the June squeeze now. So from the bottom to the top of the January to the bottom, the June squeeze came up to the 3618 pretty much on the dot, actually poked slightly above. So the January squeeze came in between the 2618 and the 3618. The June squeeze came up to the 3618 on the dot. Now running a macro Fibonacci extension for the current cycle, which would be from the bottom to the top of the June to the bottom that we found a few weeks ago, halfway in between the 2618 and 3618 would be roughly $130 to $145. So that would be the price target if we're just talking strictly macro Fibonacci extensions. And this is conservative, in my opinion. This is a very conservative target, 130 to 145. If we got another algorithm squeeze and the way this plays out is we just start stair-stepping, which, I mean, it's possible. I just don't think it's likely. Where you have your January squeeze, you come down, you have your June squeeze, you come down, and then you get another squeeze to 130, 140, you come down, and then MOASS at a later date, which is possible, but I'm leaning more towards this squeeze is going to be the MOASS now, and I'm not saying this is for certain, but in my opinion, anything over the 4236 here, we're in MOASS territory. So anything 170 plus, and then and this would be even more confirmation, breaking the 4764 here, 190, $200 plus on the squeeze, you're in MOASS territory. So if we don't get stopped out at 130 to 145, in my opinion, we're in the MOASS. And then 200 plus, you're pretty much saying for sure we're in the MOASS. And that's pretty much all the charts that I wanted to touch on for today. One other thing that I do want to touch on, though, is that once again with the reverse split, now there's so much mixed emotions. It's like people are just so emotional, like complaining about the reverse split. Oh, it's going to kill the squeeze. Nothing in the world is killing the squeeze. So you have to understand something about the market is it's completely fake, and it's repeating fractals over and over and over again. That's what the market is. It's repeating fractals. There's no supply and demand at all. The algo plays ping pong with itself, bouncing buys and sells to itself, with all of our money sitting in dark pool, just ping ponging up and down, playing the macro out the way it's going to play out. It's literally doing it the exact same way. I mentioned from my first video, we're running on a loop. We are running on a fucking loop. There's no supply and demand. Elon Musk could drop $1 billion into AMC and we would be dead flat. There's no supply and demand in the market. It's fake. The market is completely fake. The sooner you realize that, the better off you're going to be. So nothing is stopping the squeeze. Nothing. And You know, people say they. The they is the algorithm. It's a computer. That's what you're seeing. This is all computerized trading here. This is not people. It's got a computer buying and selling to itself and playing this out on a loop. That's what we're seeing here. This is completely fake. Nothing is stopping the squeeze, including the reverse split. And if you remember me saying from my very first video, in my opinion, and before I say this, every big move, volatile move to the upside and downside that you see in the market is always justified by some sort of news. And in my very first video, I said, in my opinion, the reverse split is our catalyst. That's the catalyst for our squeeze. Once again, if you think about this from a logical standpoint, it makes sense. Because if we're squeezing, if the reverse split goes through while we're squeezing, yes, your shares will be cut in half by 10x. So you'll lose 10x of your shares, which people complain about that, but you have to also think about this, like how does it work on the other side of this, is the stock price jumps up 10x. And the 10x jump from the reverse split isn't the squeeze. That's just the reverse split. So yes, you'll lose 10x of your shares, but the stock price will jump 10x, and that is not including the squeeze. That's just the reverse split. So thinking about this from a logical standpoint, and I'm leaning more MOASS than anything right now. If this was the MOASS and it happened at the same time as the reverse split, so we start squeezing, the reverse split goes through, now it's 10x the stock price, and we just start straight lining to the upside, it's impossible for the majority of retail to accumulate any significant amount of shares at all. So we squeeze the $140 and the reverse split goes through, you're talking $1,400. The majority of retail cannot accumulate shares at a significant level at $1,400. It makes sense. They wouldn't kill the squeeze. It would just prevent a ridiculous amount of FOMO, which we don't need FOMO because all of the buy pressure is sitting in dark pool waiting to go. We're just waiting for the macro to finish playing out. So again, I don't understand like the controversy and the whining. It's just, that's what it is. It's whining. I'm reading the comments and it's just whining. Oh my God, the reverse split. How could Adam Aaron do this to us? He turning his back on us and killing this. It's not killing the squeeze. It's the catalyst for the squeeze. So that's pretty much it. I'm sick of hearing about the reverse split. I'm looking forward to it because the sooner we get the reverse split, that means that we're going to be squeezing, in my opinion. The reverse split will be timed with the squeeze, in my opinion, and that will be more than likely the MOASS. So that's pretty much it for the video. Quick recap, SPY is stupidly bullish and was in January and June while AMC was squeezing. It was rallying to the upside the exact same way we're seeing now. Broke both macro patterns to the upside, extremely bullish on SPY. AMC is tracking this macro perfectly. The downtrend that you have here, you break down from the blue when you're flat. Same thing here, you break down from the blue when you're flat. Tracking the macro perfectly. We're curling up to the upside here in this last iteration. I mentioned previously, every iteration here, green, red, and blue, you come up on the other side of it. And the blue takes you to your squeeze. So when you come down to the flat portion, even here, all of these, they come up on the other side. And this blue one takes you to your squeeze. Same thing here. They all come up on the other side. That's what we're waiting for. And this breakout of this triangle here will be taking us to our squeeze. And nothing in the fucking world is going to stop it. Nothing. Not World War III. Not fucking J-Pal. Fucking nothing. Nothing is stopping the squeeze, including the reverse split. I'm done saying this. I've said this countless times throughout my time on YouTube. Nothing is killing the squeeze. It's not up to them. It's not up to the hedgies whether or not we squeeze. It's up to the algorithm, and when it's done finishing playing out the macro, and we're at the end, and we're very clearly curling to the upside here. So that looks good. The area here, this looks amazing. I touched on all of this already. The micro looks perfect. The bottom that we have now, if I can click on it, the bottom that we have now in the channel and the volume profile looks perfect. Everything looks good. The gaps, this is insane. This is not retail and institutions doing this, driving the price up and down and doing this. We have gaps in the exact same spot on both sides. This is the algorithm running this fucking stock on a loop. That's what this is. Everything else is noise, including the reverse split. It's all fucking noise. It's all noise. And then that's pretty much it. And the fibs, again, 140 price target is your absolute lowest. That's your low ball. That is, if you're looking to get out at a safe spot, $140 would be your target. Anything past $200, in my opinion, would be the MOASS. If the reverse split went through while we were squeezing, it would be anything past $2,000 would be your MOASS, in my opinion. That is pretty much it for the video. That's it for my rant, and I will catch you guys next week. Next week looks very promising, so hoping to see more upside, hoping to maintain the bull trend that we see on AMC, the channel, and hoping to see upside on SPY. I mentioned we don't have to. As far as the symmetry goes, we came up on the other side of this in the green circle here, so potentially you get this last dip here one more time to the middle of the range before you go higher. It's possible that happens where we come back down to 438 before moving higher, and this would play out as a cup and handle. Or we just completely just start ripping to the fucking upside here. So everything looks good. Catch you guys next week. Enjoy your weekend.